What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this video is a brief Ortex update to look at the short interest and utilization going into this next trading week to see where we are at the current time in terms of just how much short interest is there in AMC right now in terms of the baseline estimates that Ortex is giving us, and what is the potential right now at the current time for one of those forced share recalls that we most likely saw back in June. We're also going to be going over this potential gamma squeeze that we have coming up and why there is a liquidity crisis starting to form not only from these short hedge funds on AMC, but the entire market as a whole. Now, in addition to this, we also have to go over something that is posing a huge issue to all of these short hedge funds on AMC. Their fundamental short thesis for shorting AMC right now is getting worse and worse by the day. I know we saw that analyst come out last week and try to basically say, well, these are the numbers that we're projecting, that AMC is going to be coming down 80%. But if you guys remember from one of my videos last week, we saw that firm actually up their position a significant amount in their long AMC shareholding. So that doesn't make a whole lot of sense. And what we're going to take a look at in this video as well, it just feeds into what we have been saying over the last 8 months, that AMC is not going anywhere. Now, at the end of the video, we're also going to be doing some of these more broad market updates to get a better understanding of why a lot of these institutions are looking for a significant correction coming in the near future. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And the more people that we have staying up to date with accurate AMC information, the stronger our community becomes. And if you want to see more videos like this, make sure you guys hit that subscribe button. So AMC closed on Friday in the after hours trading period at $44.10. When we come over to Ortex here, we can see that the current estimated short interest as a percentage of the free float, 18.93%. During the day on Friday, I was traveling, but it did get all the way up to over 19%. We are continuously seeing these shorts add to their position, and again, these shorts have not covered. Now, when we're taking a look at the utilization right now, 90.91, we've seen utilization get almost to 93% over this last week. With the short interest continually going up, I would expect to see this utilization number, which is the amount of shares that institutions are willing to lend out versus the amount of shares that they have lent out already. I would expect that to see that number actually go up. And remember, when the utilization gets higher, it puts a lot more pressure on these institutions, meaning it increases the potential for one of these forced share recalls, which means that these lenders go out and forcibly close out these short positions because they need those loaned out shares back. Now, when we come over to Stonko Tracker right here, let's take a look at the options data going into this next week. So we have at the current time 24,407 calls in the money and 4,342 puts in the money. If we are going to see any type of hedging from these institutions that have sold options, we would see it lean more towards the buy side, which could potentially bump the share price of the stock up. But with only 24,000 call contracts in the money, it's most likely not going to do a whole lot. But remember, we saw small numbers similar to what we are seeing here last week. And then we saw a lot of people start to gamble on these weekly options. And again, you can do whatever you want with your money. But if we start to see a price movement to the upside, we are going to see a lot of this hedging come into play. Now, what I want you guys to think of when you think of gamma squeeze or delta hedging is think of if you have a fire. If the fire starts to get bigger, you automatically just pour gasoline on that fire. It automatically just makes that situation bigger, more volatile, and that is what happens with the price. But what I am really looking for this potential gamma squeeze is this September 17th date. If we see a significant run up in the share price of AMC before this date, yeah, we already have 117,000 calls in the money right now, and most likely a lot of these have already been hedged for, but there's 278,000 contracts that are out of the money. Again, a price movement to the upside is really going to force a lot of buying volume from these institutions. And when we think about the total amount of money that these institutions, these market makers would have to spend in order to hedge these contracts, it is vastly more than what they had to spend to cover those 240,000 contracts back in June. This feeds into this liquidity crisis that we have starting to form. So let's talk about this liquidity crisis this really quickly. Over this last week, we saw Phase 5 UMR come into effect. And for those of you guys who don't know or need a refresher, this is essentially what Phase 5 UMR is. It has to do with these OTC derivatives, and there will be an upsurge in the volume of margin calls and an increase in the need for third-party custodians to keep safe collateral. As a result, UMR will likely require many buy-side firms to make significant changes to their existing collateral management processes. So what Phase 5 is really doing is it's affecting the buying firms. So it's most likely, they've said this in the past, but it is going to be affecting the hedge funds and other buying institutions more and less so the banks. What this is going to do is it's going to increase the initial margin requirements and increase the volume of maintenance margin calls. And in addition to this, we also saw NFCC 005 come into effect on Friday. So there are a lot of moving parts here. We are seeing this liquidity get drained out of the market. And when you combine that with a system that is massively over leveraged at the current time, with not only just these shorts on AMC and GameStop, but with the entire market, long positions, short positions, something is going to have to give eventually. Now let's get into this big problem that these AMC shorts have right now. This has been a continuously developing situation that we've known about for the longest time. When we come over here, Shang-Chi debuts with a marvelous $71.4 million box office in North America and shatters all-time Labor Day record. We have seen AMC continuously come out in the past and break these pandemic box office records, but what we're seeing now is an all-time record. So here's what we need to think about. The short thesis that basically is the main reason why these shorts have entered into their positions betting against AMC is that they think, well, streaming is going to take over. People are more in their homes now than they were before, and people don't want to go out to the movie theaters. That is just not the case. We've known about this for the longest time. People still like movie theaters, and even from the comments from Adam Aron in his earnings call, where he was basically saying, yeah, streaming really isn't that much of a competitor to our business model right now, and we have already signed this exclusive deal with Warner Brothers to exclusively show their movies in our theaters 45 days prior to when they get released on these streaming services. You can see how this short thesis is starting to fall apart. Now, again, fundamental news isn't the make or break situation in a short squeeze play. But what it does do is it gives a lot of people a lot of good confidence in putting their money or even more money into investing into AMC. Now let's continue this conversation that we've been having on this channel for a while about the current state of the market right now. We are really not in a good spot right now. Everything is pretty overextended, and almost every single day we are seeing new signs that a major market event could be coming in our near future. Now when we come over to this CNBC article over here, what this individual is saying is there's a huge amount of froth in the marketplace right now, much like we've seen in other important tops of the market that only became obvious in hindsight. Maley sees warning signs in today's market that looks similar to red flags during the 1999 to 2000 and 2007 to 2008 peaks. During the dot-com bubble, for example, he says that stocks shot sky high no matter the fundamentals, much like AMC and GameStop have this year. Now, this is a CNBC article, so it is not surprising to me at all that they decided to take a shot at AMC and GameStop and include this in this piece. But what we really need to take a look at here is what this individual is saying about the market. Now we have a very similar situation. You have the meme stocks, which are flying. They're not going to change the world, and these stocks are going up 2,000% in just a few days. You have these SPACs that are going crazy here. We have a stock market that's very, very expensive in a market that is overbought. So what he's really saying here is that there are signs of things happening in the market that really should not be happening. Really, it's very rare that we see stocks shoot up this crazy high amount in a very short amount of time. What this is telling us is that retail investors are going very, very hard on a specific sector. We are seeing institutions get very worried, and the overall state of where we are at with the debt ceiling crisis, inflation, even the real estate market at the current time shows us that something is going to have to give eventually. And once one thing starts to really go to the other direction, we are most likely going to see the other dominoes start to fall, and we are going to be in for either a small correction or a big crash. Nobody knows when or how big this situation is going to be. A lot of people have been projecting mid Q3 leading into Q4 due to this debt ceiling crisis that we have right now and the possibility of the Fed's tapering of asset purchases. But with what we've seen out of the economic data in terms of economic growth in the United States at the current time, I don't necessarily believe that the Fed is going to decide to taper anywhere in the near future, which is going to give us a little bit of blue skies for this short squeeze or the next really big price run up for AMC. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great weekend, and I'll see you guys in the next video.